Bull Bear Buzz Podcast for decoding markets, fueling minds. Okay, let's dive into the Indian stock market from Tuesday, May 27th. We've got some interesting sources here, and our mission today is really to unpack what went on.
Right.
Because it was a bit of a strange day, wasn't it?
Right.
The main benchmarks, Sensex and Nifty, they fell, but the mid and small cap stocks actually looked pretty resilient.
Yeah, that divergence is really the main story, I think. Your sources clearly show that two-day winning streak for the big indices came to an end.
Right.
The Sensex, it took a noticeable dip, fell 625 points. That's about 0.76%, closing at 81,551.63.
Okay.
And the Nifty 50, pretty similar story, down 175 points, which is 0.78%, finishing up at 24,826.20.
So those are the headlines suggesting, down day across the board. But then, like you said, the interesting part.
Exactly. You look at the mid and small caps, and they just didn't play along. The BSE mid-cap index, it actually gained 0.18%. And the small cap index up 0.19%. So yeah, they outperformed quite clearly.
Which is fascinating. On a day the main indices dropped like that.
Yeah.
But that drop in the heavyweights, it still had a real impact, right, in terms of overall market value.
Oh, absolutely. The sources point out that investors overall lost nearly 1 lakh crore rupees in market cap on the BSE.
Wow.
Yeah, the total market capitalization slipped from about 445 lakh crore down to 444 lakh crore. So, a tangible hit.
Okay, so the big indices are falling, market cap is shrinking. What was pushing those large caps down? What do the sources say?
Well, Vinod Nair over at Geojit Investments, he lays out a few key reasons based on the source material. Number one seems to be profit booking, just taking some money off the table after the recent gains.
Makes sense.
Then you had weaker global cues kind of filtering through. And here at home, just a lack of fresh positive news or triggers to keep pushing higher.
Okay.
He also mentioned that valuations in the large cap space were maybe looking a bit stretched, and foreign capital inflow wasn't really strong either, kind of dwindling.
So multiple factors weighing down the big guys. That failure to break 25,000 on the Nifty again probably played into that sentiment too.
Seems likely, yeah. Without those strong catalysts, hitting that resistance level proved tough.
All right, so that explains the caution in large caps. But what about the other side? Why did the mid and small caps manage to hold up, even gain a little?
Nair points to a couple of things there, too. A big one is continued retail money flowing specifically into those mid and small cap segments. That provides a lot of support. Plus, there are expectations building for an earnings recovery, maybe starting Q1 of FY26. And some of the Q4 earnings we've seen have actually been better than expected.
Okay.
And interestingly, he notes their premium valuation compared to large caps has moderated slightly, so maybe they look relatively a bit more attractive now.
It really does show how different parts of the market can move to their own beat, doesn't it? Based on who's investing and what the specific drivers are. Let's look at some specifics mentioned in the sources. Tire stocks seem to have a good day.
They really did. Names like CE8, JK Tire, MRF, Apollo Tires, they all got a boost, apparently linked to their Q4 results.
Right.
CE8's a great example. It jumped around 22% over the last few sessions, according to the sources.
Wow, 22%?
Yeah. And the reason seems to be strong demand from people replacing old tires. That replacement market is offsetting slower sales of new vehicles. Plus, stable raw material costs, with crude oil prices easing off, and they've benefited from earlier price hikes, too.
And the analysts are seeing this, too. I saw mentions of upgrades.
Exactly. Brokerages like Nomura, MK, Motolel, Oswald giving upgrades or higher price targets. And CLSA apparently put out a really eye-popping target for MRF, over 168,000.
Incredible. Okay, another stock-specific story was Geo Financial Services, right? It gained nearly 4%.
That's right. The trigger there, according to the sources, was SEBI giving the final nod for their joint venture with BlackRock Asset Management to actually start operations.
The Geo BlackRock JV.
Yeah, and that's potentially a big deal. They're aiming to offer asset management, wealth management, broking, really trying to make investing simpler and more accessible for people in India. Their recent Q4 results, showing decent income growth, probably didn't hurt either.
So you have these pockets of strength, like tires or specific news-driven moves like JFSL, even while the broader market looks weaker. It really underlines that selectivity. The sources mentioned quite a few stocks hitting 52-week highs and upper circuits, too, even on a down day for the Nifty.
It does. And looking at the Nifty itself, Rupak Dey from LKP Securities, his technical take is that the index might be consolidating now, taking a pause.
Okay.
The overall trend is still seen as strong, trading above key moving averages. But he did note one indicator, the RSI, is showing maybe some fatigue, suggesting it might need a breather. He sees potential resistance up around 25,000 to 25,150 and support down near 24,700.
So pulling it all together from these sources, what does this day tell us? I mean, it seems to powerfully show that you can't just look at the headline index, right?
Not at all. It shows that different segments, large, mid, small, and even individual stocks within those segments, they react very differently based on, well, everything from who's buying to earnings to valuations to specific company news.
Yeah, the market's complex. The main index can dip, but there can still be real strength and opportunity hiding in plain sight in certain areas.
Which leads to maybe a final thought, or question, really. Given this divergence we saw pretty clearly, is this resilience in mid and small caps? Is this signaling a more, let's say, sustained shift in market focus? Or is it just a temporary thing, a rotation, while the big, large caps sort of catch their breath and deal with profit booking?
Something to definitely keep an eye on.
The information provided is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding. We are not liable for any losses from decisions based on this information. For more unbiased update, please subscribe to Bull Bear Buzz podcast.